Every evening, we make a short video for all of our members, our monthly members as well as our annual members. And we post this video to the website and we code it, the date, in either green or red to show the bias. And we also put in any cautionary words as a quick check. We're going to play for you what we told our members last night and think for a moment what that may have done for you, not just from last night, but from a few days ago. Because you see, we've been telling and cautioning our members that there was a squeeze coming. I'm Bagadon, stockmarketcaddy.com, 813-758-8263. Okay, everyone, it's Don. It is, I was about to say Tuesday night. It's actually Wednesday, early Wednesday morning, just past midnight. And the markets were running, not unexpected here, right? Light volume in front of the Fed and a natural bias in front of the Fed. So I'm not the least bit surprised, hopefully you are not, that they would run the markets. Tomorrow is a Fed day, and we're not going to, indulge into the nonsense that you'll hear on the media. Are they hawkish? How is their tone? Of course it's going to come out. Oh, what a marvelous job! It's just buffoonery. So we're not even going to play. The volume will, in all likelihood, barring any headline coming out of the Ukraine, will probably remain light. And it's not just the Fed, but it's also the contract roll, right? That contract, that June contract is expiring. So it's normal for the market to kind of run up into this period, and it's no accident where the Fed schedules their meetings. They know this. So they want to have everything on their side. I don't expect anything outrageous. They had built in an expectation they were going to increase 50 basis points. I'm inclined to think they're only going to do 25. I think they want to kind of surprise the market, so that could juice things a little bit further. And that could carry right into, Friday. So I'm not saying that the markets are going to turn around and crash, although this fallout, the Russian markets have yet to open. We have to have hedge funds defaulting, and maybe even some banks around the world, and that hasn't really hit yet. And that could create a bit of a liquidity crisis. So I think we have to be prepared for that. But for annual members, we're staying small, nimble, and just exploiting the action. For those around the Fed, a lot of times the first move is wrong. I'm talking like the first 15, 20, 30 minutes, and then sometimes it can revert and go the other way. The action could be fast. You'll have a lot of home gamers, so to speak, coming into play just on Fed Day. For Susan, it's a day she takes off. It may be difficult, maybe, for the trends to get established. Therefore, something that is going to trade, quickly, if you want to just be picking off trades, something along the lines of the chipper, so to speak. All right. So, but let's go through and see what we see. We had a neutral market on Nicholas, but Nicholas is now confirmed long. You have to kind of see through here. We got a call out. Here's Nicholas, the Russell, the YM, the ES, and the NQ. They're all now long and basically flat, and the VIX is short. So he is in a confirmed long position. And we got a whole bunch of stocks in euphoria. Not nearly as many. It's not overly done yet. These are likely to come in, but it's going to, they're going to need more. How about what do we got over here? And see, remember we had a whole stack of them. Remember I said you could just about throw a dart. No, now you don't have any of them. They've all bounced. PSX could still bounce. ATVI, Take-Two Interactive, Citrix. These here could possibly bounce. So tradable opportunities with options. One of our members, David, asked us about our option. We purchased a 42.10 back when the market was under pressure, and when it ran up, we sold a 43.25, and we're in the money. It wasn't a huge trade. That was back several days ago now, and we'll probably pop that off or close that out maybe tomorrow. See if we get a little bit more out of it. Let's go to the NASDAQ 100, and so you don't really have anything in you that much in euphoria. Look at Regeneron's continuing to run. Veritex, these some older. Not sure what that's all about, but noteworthy, and not much here. Baidu still. So market is right in the middle, right? It's in the middle, kind of a dangerous little place. So I'd be opportunistic. Would have been a lot easier to come in when the stocks were all stacked up in here and to get your calls on. They're not there anymore, and they're not over here. So we're in the middle. So I'd rather wait and be opportunistic during the day and see what this market wants to do. All right. We're going to just take a quick look in here. Look at that. Remember, we were just here last night and just couldn't get through. So that's telling us 41.35, strong support. And this one right here, 40.90, right? So this, if this ever breaks, now it would be normal for this to kind of pull back. We did get above this swing, pull back a little bit, and then ratchet higher. I'm thinking this holds. We tested it once, twice, 3, 4. It just couldn't get through here and then bounced. I think we got to go higher. I think we could be up in here, and we can be up in here at 44.08 before the end of the week. Now, does the Fed move markets? I don't think so. I think it's buffoonery. But will the banks and the hedge funds make it look like the Fed is important? Sure, it's in their interest. They want people to believe in the Wizard of Oz, because he will do their bidding for them. Nothing more than an academic stooge, in my view. Their models, their numbers, their assumptions is garbage. Sorry. I don't know if we got any economic degrees out there. Remember, prior to 1950, I don't even think you could major in college with an economic degree. It was more or less, a pseudo science.